I'm Scott.
I'm Bill.
And we're the Trade Guys.
You're listening to The Trade Guys, a podcast produced by CSIS where we talk about trade in terms that everyone can understand. I'm H. Andrew Schwartz, and I'm here with Scott Miller and Bill Reinsch, the CSIS Trade Guys. Coming up next on this additional emergency episode of The Trade Guys, we'll talk about uncertainty in the markets, uncertainty among consumers, mixed messages coming from the administration, plus we'll talk a little bit about dollar diplomacy, all on the next episode of The Trade Guys. Trade Guys, we're back and we're hearing the term uncertainty ad nauseum. Okay, so the administration is sending some mixed messages on trade. We're talking on April 8th, Wednesday. Guys, what do you think is really going on here?
Scott, why don't you go first?
Okay. Well, look, we have an unconventional president, but that's not a surprise. We knew that. And part of what is going on, I think, may actually be calculated. If you've read The Art of the Deal, which is about Donald Trump's approach to life, there are a lot of moments where his negotiating style creates uncertainty. He typically takes a maximalist position and then sits back and waits for the counterparty or counterparties to respond. And if they're busy negotiating with themselves, he'll stay out of it.
Right. He refers to it as anchoring, right? He's
Yes.
anchoring himself, and he's not going to budge because the minute he budges, something not good and not favorable to his position is going to happen, he believes.
Something like that. Yeah. And so I think that's what we're experiencing here. I do think ultimately we will be in negotiation, which is very important to not be distracted and not spend a lot of time wondering why this happened, because frankly, he's been consistent on this issue for 40 years and he's not going to change now. But given that, I think that there will be a negotiation. And the question is, who steps in and leads it? As I see it, two things could happen, and I think are both likely to happen. First, we have a political commitment by about 70 countries to engage in tariff cutting. So how about a zero for zero initiative, such as the European Union suggested?
Wall Street Journal suggested it.
Right. This is a wonderful time for broad-based tariff cutting. It will need to be led. It's going to be difficult, and it will require careful management. But that's a great opportunity for the world. Second, we talked a lot in this country about decoupling from China. The current approach with China is decoupling with China's own assistance. So the tariffs, as they're escalating, will incentivize all the people in that market and serving U.S. consumers to find alternatives. So I think both those things would be beneficial in the long run from a strategic standpoint and an economic standpoint. Both would need to be led, and that may not be the president. But look, I think there's real opportunity here, but you've got to sort through the confusion to get it.
Okay, so Scott, you're optimistic. Bill, there is no way you're optimistic.
No, not going to
go to you.
Not going to happen. Scott's in fantasy land. Go down to wherever Disney World is, Orlando. Thank you, and walk around. The rollout has maximized uncertainty. You can see that in the Canada-Mexico episode. Tariffs were on, they were off, they were up, they were back to where they were before. Then they were on, then they were off, then they were postponed. You could see it even in last week's rollout. You can argue that Trump has been consistent for 50 years, but his minions have not. So starting from the day of April 2nd, you've got some saying there's not going to be any negotiation. You've got Peter Navarro saying this is an emergency, not a negotiation. And then you've got
Elon Musk calling Peter Navarro a moron.
A moron, yes. Well, that may be one area where Musk is onto something.
Or Navarro is onto something, you mean?
Well, he said, he called Musk a car salesman, I think is what his...
Oh, that's right. He is a car salesman.
Well, maybe they're both right.
Right.
In any event, Lutnick seems always to be the first to talk and always seems to be one step out of tune with whatever Trump is going to go. So he scrambles to get back on the page. I mean, Trump is sort of now kind of settled that argument definitively in exactly the way I think Scott expected, which is, we're going to negotiate. I'm a deal guy. Of course, we're going to negotiate. And part of the reason is it puts him front and center. They're all coming to me. Netanyahu was here today. The Korean acting president called him up. The Japanese prime minister called him up. Everybody's coming to him. He's the center of attention. He loves it. The problem is, of course, is what are they going to negotiate? And here's where I think Scott's in fantasy land. Trump's idea of negotiations is the other guy makes all the concessions and we do nothing. And what he's looking for this time around is other countries are going to come in and say, we will do the following things. And they'll have a list of whatever it is, beginning with zeroing out their tariffs and then plus other stuff. And the Trump response is, well, maybe we will drop our inflated tariffs back down to where they were before. So the end game for Trump is we end up not changing anything from 3 weeks ago, and the other guys end up making significant concessions. Some of them will do that, but then again, you've got the consistency issue. You've got Vietnam announcing they would zero out U.S. tariffs, and then you've got our good friend Peter Navarro, the alleged moron, saying, not good enough.
So what's better than zero?
Well, apparently there are a bunch of unfair trade practices that he doesn't really identify, and which the formula that was used, which we talked about at the last podcast, doesn't quantify, measure, or identify. But apparently, going from 46 to 0 is not good enough. And so, there will be some further negotiation on other stuff. If they have a digital services tax, that's an easy one to identify. But, if you listen to what they were saying before, they're counting value-added taxes as unfair subsidies. We've been through this on a previous podcast, and if you read my column, I went through the math. It's not a subsidy. It's a phony argument. Plus, above and beyond that, we are getting into now areas that focus on how these countries choose to organize their societies, which is not the same as tariffs. 170 countries have value-added taxes. It's a sales tax, and so we have a sales tax too. And a lot of them use the sales tax in lieu of various forms of income tax. It's the way they've chosen to tax their citizenry.
Right, consumption.
They're taxing consumption rather than production. And a lot of people will tell you that that's better. I'm not sure I'm in that category, but the point is that's how they've chosen to organize their economy. Going in and telling them, 170 of them ultimately, not to do it that way goes way beyond just stop doing protectionist things, and it gets to agriculture very, very quickly, because when you start talking about non-tariff barriers, the first ones that come up are health, sanitary, and phytosanitary barriers. This is the European chicken argument that we've been making fun of, but it's a lot of other things as well. And, talking about chickens from the European point of view, our standards are lower than theirs when it comes to health, safety, and the environment. I mean, you can argue about whether they're right about that, but that's what they think. And so when the United States goes back to, in this case, the European Union and says, we want you to let in our chickens, we want you to let in our GMO, genetically modified grains, they're going to say, these are dangerous. And you're not asking us to do something to drop protection. You're asking us to lower our health standards. And that's going to be very hard for them. So I don't think these are going to be simple negotiations. I don't think zeros for zero is what Trump has in mind. I think what he has in mind is they go to zero and we stay where we are.
And they make other concessions.
What we're going to end up with is countries that are in the 40, Japan, I think is 26, 25 range. They're going to get down closer to 10, but I don't think they're going to get to zero. I had thought nobody's going to get to zero, but I did an event today with a former Trump staffer who thought that countries that were currently at 10, Australia, Singapore, UK, might get down below 10, might get down to zero, because Australia, for example, is a country where we have a surplus. So why are we punishing them? But I don't think this is going to be the happy ending that Scott's anticipating.
Bill, before we have to put you on suicide watch, I'd encourage you, take a breath. Look, I agree.
All the knives have been removed from my desk.
I knew this was coming. Thank you, Scott.
I do have scissors, though. I just
okay.
warn you.
I'm concerned about you, Bill. But first, this is going to play out over time. Second, I would agree with you that some key officials have done a very poor job communicating about this, because trade's complicated, it's messy, and there are a lot of non-tariff barriers that are difficult to unpack, including ones that we have. I would lose even more hair if I had to explain the sugar program to someone who not familiar with it. The U.S. has its own problems in this tariff schedule.
Yeah, we're going to rename the podcast Three Bald Guys with Glasses.
But I'd like to see Scott explain the sugar program.
Well,
that would be an experience.
That's a whole other deal.
Not today.
Yes. Yeah, another day, another time. But in this case, what I'd encourage you to do first, let's watch the Japan negotiations. They're going to play out quickly. And there are two key players, Treasury Secretary Bessent and USTR Greer, who've been assigned to lead it.
Who are the relatively sane ones in this equation. I give you that.
Well, they're likely to set a pattern for bargaining. Okay. Second, I'm not convinced there isn't a bigger role for leadership. Where is the WTO Director General? I thought we had an international organization that was responsible for trade policy and had broad membership and could convene trade negotiations. They seem to be absent, but I think what's needed here is get the professionals at the table and have some understanding develop about what can be part of the negotiation, what can't be, and try to basically simplify and specify the expectations.
Okay, Scott. So this sort of needs to happen sooner than later because you've got the business community not as vociferously yelling yet, but they're already making a lot of noise and they're saying, why this is a self-induced recession, among other things. How much time do they have here before things really start to crumble? I learned today just on our autos alone, Audi has stopped sending cars to America at the moment. They want their dealers to sell off what they have. And when they start sending more, Audis and Land Rovers could be as much as $20,000 more per car. And on the lower end, on Honda Civics and things like that, could be $2,500 to $4,000.
There will be disruptions in the market. I've noticed the local Lexus dealer down here was open on Sundays, which is unusual, and they had beat the tariff, move the metal sale. So there's a lot of people trying different approaches to cope with the disruption. The disruption, I think, is intentional, and I think the president sees that in his interest at the moment. But I think there is a role for organizing and disciplining what goes on from here by the participants. So where's the Business Roundtable? Any statements? How about the Chamber of Commerce? Who's ready to talk about leading this process?
It seems like everybody's afraid of crossing the administration, including these business leaders. A couple have spoken out, but not as many as you would think.
There's two factors there. They are intimidated, and Trump has a tradition of going after companies that cross him. I think I've told this story before. I have a friend who, in the Trump 1.0, part of his job was to get up 6 o'clock every morning and check the tweets just to make sure his company wasn't mentioned. One day it was. Fortunately, it was a compliment. So they didn't have to go into panic mode. But companies are intimidated. But more than that, if you talk to the roundtable, and I just was talking to someone this morning who told me I was right about this, which is always nice to hear.
We love that.
If you ask the roundtable, where are they spending their lobbying money right now? They're spending their lobbying money on the tax bill. They're not spending lobbying money on tariffs.
Because they can't shape this tariff policy. They think they can shape the tax policy.
Yes, two reasons. One, as Scott said, he's had these views for 50 years. Most people think it's a waste of time to try to change his mind on the big picture here. And I think they're right about that.
It's true.
But second, if you ask big companies what's important, they're going to say tax cuts every time. And that they can influence, because that is an act of Congress. I mean, you can make the case the tariff should be an act of Congress too, but for the time being, they're not.
And some people in Congress are making that case.
Slowly, yes.
Bipartisan level.
They're up to 7 senators sponsoring the bipartisan bill that would give Congress a say on these tariffs. We'll see if Senator Grassley is the lead Republican on that. I did a session this morning, as I said, with somebody who had worked in the Trump administration. He thought he was beginning to see some signs of resistance in Congress, much more in the Senate than in the House, which was kind of interesting because the House is historically more responsive to constituent calls and emails and postings, and you would expect if there's going to be an uprising that it would be there, but so far it's been more visible in the Senate.
I think the thing that surprises me the most, and I want to go to you on this, Scott, is that the president has always measured things by how well the stock market's doing. He's measured things by how well the American people are doing economically. And, he has always, whether his approval ratings were up or down, he's maintained good numbers on how he handles the economy. That is no longer the case. He's starting to get underwater on that.
Well, yes, I think there is a risk in this. And what he's done up to this point in his administration, it's under 100 days, so it's hard to characterize a lot of it, but he's chosen issues where the American people are generally supportive of it. whether it's migration or keeping boys out of girls' sports. And there's all sorts of things that he's taken where he's got the 70 of a 70-30 issue. In this one, I'm not so sure. So that's a political challenge. But what he has is a Treasury Secretary who, while acknowledging that the equities market has gone into correction territory, he's focused on the 10-year Treasury. As far as I can tell, the Treasury Secretary thinks it's all about the bond market. But having said that, I think President Trump will have some favorable employment and inflation numbers in his favor. And it looks to me like he's going to take a gamble, much as Ronald Reagan and Paul Volcker did, of early in the term, take the tough medicine or something that's disruptive, but he thinks will pay off in the long run in terms of bringing investment to America and helping to both grow the economy and reduce the deficits in a way that forestalls the solvency problems of the Wall Street guys who are in his administration have clearly identified. I think that's why the 10-year yield is so important to Secretary Bessent. I looked, and there's $9 trillion of federal debt that will need to be reissued in 2025. So there's a fiscal challenge that's behind a lot of this. So I think he's gambling that this will not be all that popular now, but he'll get through it and it'll show benefits later on. He's going to take a hit now.
He'll get through it if foreigners continue to buy treasuries.
Yes.
And I'm beginning to wonder if that's the case. The dollar, somewhat surprisingly, has been down, which you wouldn't expect under these circumstances. And I'm waiting to see if you're going to see a move away from treasuries. I mean, the signal that Trump is sending is a simple one, which is the United States is no longer a reliable partner. And if I were a foreign investor, I would think twice about sticking with dollars.
I think the dollar is still the least bad of a lot of bad options. So that is in its favor for the moment. But I would also be clear that this is a matter where there is a sizable amount riding on lowering inflation and keeping yields where they are or lower, just for pure financial management standpoint. But keep in mind, in the last 2 weeks, gasoline's dropped 10%. Crude oil's down 10%.
Food prices are down.
Food prices are down. There's and the most recent jobs report is actually, for what they're trying to do, quite positive. Downturn in federal employment and in government employment in general. Upturn in the private sector. It's surprised on the upside for private employment.
But isn't that why this seems like such an unforced error? I mean, the economy was roaring along. Prices were high, but they were doing things to reduce prices. This seems like I've heard, many people from both sides of the aisle call this a self-induced recession and self-induced inflation.
I'll give you unforced, and I think it's too early to say whether it's an error.
The jobs report reflects March. It doesn't reflect the tariffs.
Yes.
The next one will be interesting. We at CSIS have done some quantitative analysis of this and revised our projection a little bit, but we're still projecting about, I think, an 8.6% increase in prices, 6.8% increase in wages. So real wages are going to decline. We also have recalculated the revenue impact as being less than we originally thought. We originally thought it would be around $600 billion annually, which is what Navarro had predicted. But we consulted with some other analysts and have ended up in the $330 billion a year range.
Especially if they're negotiating, they're assuming $600 billion based on these ultra high tariffs. If
he puts in effect the additional 50% on China tonight, that takes Chinese tariffs to 104%.
Yeah,
on
so
average.
104% on China. I mean, that's nothing, right? Zero.
It'll stop imports, which means it's going to stop tariff revenue.
Okay, so what does that do to your prices at Walmart when you want to go get socks?
Well, it may mean either you won't be able to get any, or you're going to have to get them from somewhere else. Prices will go up because it'll be 46% for Vietnam. It won't be 104.
I can't tell you why I know this, but socks will be a bad example because 90% of American socks are made in America.
Okay. All right. So T-shirts that all say made in China, made in Vietnam, made in Sri Lanka. Like, what happens to those products?
Well, they won't be made in China anymore. The sourcing will change, much as Apple is assembling iPhones in India to take the pressure off their Chinese assembly operations.
We have a 24% tariff on India, though, too, right?
Well, yes. And this will take some time to settle out, and people will wait to buy their iPhones.
Okay, so people are impatient in this country. This is a self-gratifying, get what I need to get now, Amazon, ordering country. How do you guys think Americans are going to take this? Clearly, Americans, you can make the argument that we should be standing up to China, but when it starts affecting everybody's bottom line, what happens?
I think that for big ticket items, they're going to wait for that. Well, in the short run, there will be a spurt of buying. I mean, the car thing. I mean, Scott referred to what's going on in North Carolina. People will take advantage of existing inventories and use those up. Although I think if you watch what's happening, I would predict within a few weeks, you're going to see domestic car prices go up as well as imported car prices go up, because that's what happens with protection. People take the opportunity to raise prices, but the big hit will come later. In cars, the tariff on auto parts and components doesn't go into effect until May 3rd. And so that's when the bigger hit will come. Right now, it's on finished cars, and you've got inventory buildup, that deliberate stockpiling. So I think in autos, it plays out into the summer before you see a real impact. The immediate impact will be on food, primarily. People don't stockpile bananas.
And they don't stop eating, yes.
And they don't stop eating either.
Yes.
So necessities will go up. This is why I said, in the last podcast, this is such a giant income transfer, because tariffs are regressive. They're going to be paid more by the poor than by the rich. And they're going to go to pay for tax cuts that are going to benefit the rich. This is a giant income transfer from the poor to the rich that's going to increase income inequality. The poor are going to be strapped, and they're going to budget. They're not going to buy stuff. They're probably not going to travel as much. And of course, Canadians aren't traveling as much either, as we've seen from short-term tourist statistics. Snowbirds have all canceled their reservations.
There's a piece in the paper today about how, Canadian snowbirds who typically go to Palm Springs aren't going.
Right. No, there have been reports about that. Travel agents have said the bottom's dropped out of that market on the East Coast too, Florida, and other places on the Gulf Coast. But
maybe all these things will continue. I don't think we know enough yet to get beyond speculation. We'll see. Bill, you're right that tariffs are regressive, and but we don't really know how this will affect purchasing. And as Secretary Lutnick said, well, people will buy America, and
they'll buy America. I mean, people have said for years they'll buy America. It's one of the popular polling data points is everybody's for buy America. Then they all go to Walmart to shop. The question that's going to come up in the short run is, sure, they'll buy America, but is there going to be American products to buy?
Well,
that was my question. Is there going to be enough American products to buy?
On non-durable items, I think that without question there will be. On durable items, it's probably going to take some adjustment time because you can't move a factory instantly. But there are facilities that can be expanded. You could run 24 hours a day instead of 2 shifts. There's lots that can be done in the near term on non-durable goods, so on staples. But we'll have to see how all this plays out. Many staples.
I mean, but if the tariffs are short term and they're negotiated, why would investors want to be inclined to build factories in the United States?
And in the near term, on staples, they probably already have the factories and are increasing the number of shifts a week or increasing output in some way without capital, without lots of construction and things like that. So it's one of the reasons staples are made close to the consumer anyway, because you have frequently purchased items tend to be domestic production anyway. So a lot of these things will not be disrupted, but there will be a lot of disruption, and how much and where we won't know till it begins to show up. And then we'll see how resilient the American economy is.
Well, this is why we're going to be entertained for the next several months with stories in every media over either sob stories or horror stories about people who are going out of business because they can't get key parts, or people that patted themselves on the back 5 years ago for getting out of China and moving to Vietnam, and suddenly discovered they have a 46% tariff. There's going to be a lot of these stories, and where I think that leads, by the way, is to a restoration of the exclusion process. Because what's going to happen is people are going to complain to their Congress people and say, I can't keep my shop open anymore because my parts have become so expensive. What do I do? And it's very hard to find a member of Congress willing to say, really, there isn't anything you can do. What they want to say is there's a process that you can go through where you can appeal and get an exclusion, and here's the form to fill out. So I bet you Trump restarts that.
You're seeing a process that organizes this domestically through the exclusion process. Do you see a process that organizes this internationally? Is the WTO capable of stepping up?
Well, yeah, I think. Well, two things. You're going to see tariff arbitrage. Once the dust settles, companies are going to say, "Well, I'm getting my parts from a country with a 46% tariff. Maybe I can find the same parts from a country with a 20% tariff. I mean, that's still worse than now, but 20 is better than 46. So you're going to see a lot of that going on because the tariffs are so different. I think that you're misstating the way the WTO operates. In fact, there's been some complaints recently. You won't believe me, but there's been complaints recently that the WTO directorate staff has been too aggressive rather than not aggressive enough. And the argument has been, and it's not just the United States makes this, but everybody else makes it too. The Indians make this, which is it's a member-driven organization. And the Director General does not have authority to convene people. The Director General has authority to do what the members tell her to do. And so the members need to get together. If the members want to have an initiative, the members need to get together and decide to have an initiative. She shouldn't do that. And it's the current thinking in the WTO, not in the directorate, which would like to be more aggressive, but amongst the members is, that's right. We're in charge. She should do what we tell her. She shouldn't be taking initiatives.
Well, absent the initiative, since the global financial crisis, G20 members have added, 4,500 or so trade restrictive measures.
Yes.
This isn't the first trade restriction. Donald Trump didn't invent them. There were almost 5,000 in the 15 years since the financial crisis. And no one seems to be too bothered by any of those. This is a step off a much larger cliff, I'll grant you, but it's concerning that we don't have a counterforce for opening markets that helps overcome some of these things and restores some stability and predictability to the system.
Guys, I want to ask you one last thing today before we run out of time. What about the dollar plunge? President Trump wants the dollar devalued. He wants our counterpart countries to increase the value of their dollars. What will this do, and is it actually possible? Will countries acquiesce and actually do this, assuming this is part of the other thing that Peter Navarro is talking about?
Well, Trump keeps saying he's a strong dollar guy.
Yes.
He doesn't say he wants a weak dollar. Bessent wants a weak dollar.
Again, mixed messages.
Greer probably wants a weak dollar because a weak dollar will reduce the trade deficit.
Right, but how do we get there is what I'm saying.
I don't know that you do with this set of policies.
Right.
And I think what you have is more of a stable dollar, but one that's controlled domestically. There are fewer influences on the dollar outside with the euro dollar pools down and the things like that. That's the way the Federal Reserve Board has managed things.
There's several ways to get there. What Stephen Miron, who is presumably going to be confirmed to be chairman of the Council of Economic Advisors, has written, he's talked about this Mar-a-Lago Accord, which I think wouldn't exactly be an accord because his wants to muscle the other countries into it.
Well, it's based on the Plaza Accords that Ronald Reagan negotiated.
That's the idea, which was basically to force the other countries to take steps that would have their countries, their currencies appreciate and would allow ours to depreciate. He wants them to force them to buy long-term 100-year treasury bonds or to hold other treasury notes at no interest, I think was one of the other proposals, and try to strong arm them into doing that, which would allow the dollar to decline in value. I mean, it's been declining the last few days, but I think the reason for that is because of panic and people losing confidence in the currency. I mean, Scott said it's still the least worst of the alternatives, but I'm concerned that's going to change, and people are going to say, this is not a reliable place to go anymore, not just because of the tariffs, but because of the uncertainty of policy. And you don't know what he's going to do next. And so maybe I'm going to park my money in euros for a while, and maybe we get back to treasuries next year. But right now, the safe thing to do is to go somewhere else. And so that $9 trillion of rollover may become much more problematic than Bessent thinks it's going to be.
Guys, as always.
And on that happy note.
Yeah, exactly. Fantastic analysis. We'll talk more later in the week. Really appreciate it. Hopefully the market will stop swinging wildly and we'll get some clear messages coming on everything we need to know. To our listeners, if you have a question for the Trade Guys, write us at tradeguys@csis.org. That's tradeguys@csis.org. We'll read some of your emails and have the Trade Guys react to it. You've been listening to The Trade Guys, a CSIS podcast.